weak set of numbers, no doubts about that. And that weakness is further exacerbated by the fact that the stock hit a fresh 52-week high yesterday and trades at 50 times forward earnings. The biggest weakness coming in on the volume growth front, 3% volume growth versus our expectations of 5 to 6%. Remember, it is on a high base, 13% growth in the previous or the comparable quarter, but still 3% growth is rather weak. And the weakness is across segments, because we were expecting a soap business growth of almost 2%, and therein the company is seeing some pressure, 1% growth in the soaps business, as well as the hair color business. Both these, remember, contribute very little, about 30-35% to their domestic revenues. Both of them have underperformed, and the big underperforming clearly came in from their insecticides business. We were expecting a decline of close to 3-4% on account of the stretched summer, but channel checks did indicate that June was rather good. But in light of that, if the company has posted a degrowth of revenue as far as their insecticides business is concerned, degrowth of 11%, that is weak, because this contributes 50% to their domestic revenues. International revenues, they have been good, and they were expected to be good on account of the SON acquisition that you alluded to earlier as well. So 18% international revenue growth is not a problem. It is the domestic business, and specifically the domestic volume growth, which has been a bit of a concern. And in light of the run-up that we have seen in the stock, it could be taken negatively.
Okay, Mangalam, thanks so much for all those details. We'll